Okay, guys, I think this is the most important video I've ever posted. Literally. All right. Follow me on this. It's very important. Okay. I've been studying the markets for a long time. I've been studying investing for a long time. Okay. When I first started investing, I was in $200,000 in student loan debt. Okay. 200. Yes, you heard me right. $200,000 in student loan debt. Okay. And I've made multiple millions at this point. All right. And I've studied, and there are just some things that have become so apparent to me that I have to share, because it could make it could help someone realize things that took me long to realize. You can realize way earlier. Okay. So I need that to be I need to actually share this message. I was studying this stuff. I was looking over my portfolios and things. The future just is becoming so clear that I just have to give you all the game that I'm seeing. All right. So check this out. It always shocks me. One thing that always fascinates me is the idea of the .com boom, the idea of the real estate bubble. Some of these insane investment opportunities that were just life-changing that almost no one took advantage of. Percentage-wise, no one took advantage of. Do you know someone that got rich during the .com bubble? Like, do you personally know someone? I'm curious. Actually, if you know someone personally, please say it in the comments. I'm curious. Percentage-wise, I know one person that did pretty well. But if you look back, it was the best investment opportunity. Insane. It was one of the best opportunities in the world ever, right? In history, right? And this fascinates me. Why is no one taking advantage? And I'm seeing these same things cook up right now. They're happening right now. And I had to ask myself why, because I'm definitely going to take advantage, and I'm definitely going to get very wealthy. I'm confident about it, right? I'm doing extremely well now, but I think I'm going to have a really good future with the moves that I see, right? And I think you all can too. If you actually pay attention and study and come up with your own thesis on this stuff, I think you can too. You don't have to take what I'm saying. You can just use this as a perspective, right? So I want to show you this. Let's take a look at the United States personal savings rate. This is how much people had saved in the United States year per year. Looks pretty normal, right? If you take a look around from all time all the way to 2016, things look pretty normal, right? Things happen to spike around 2019, around the pandemic, right? So during the pandemic, we got stimulus. So the stimulus money came in, people's bank accounts were flooded, savings went through the roof. And what happened right after? Everything tanked, right? Along with that, we had a run, right? We had a run in all the markets, right? We had consumer spending through the roof. We had investing through the roof. Everything just went off the wall, right? People were going out to eat more. This is once they actually could go out, right? Ordering more stuff from Amazon, Uber Eats, you name it, right? So now what happened? Now that the savings spiked and has tanked completely, now the credit card debt is running, right? So the credit card debt, this is the United States debt balance on credit cards. All right. You got some peaks. You got some peaks around 2008, some peaks around 2020, totally tanks around the pandemic. All right. Or somewhere around the pandemic, right after we get the stimulus, right? So this money runs up, we get all the savings, all the stimulus, it tanks. Meanwhile, when the money's running up and we're getting all the stimulus, the debt is going down because we're paying some of it off. Some people are trying to be responsible. Then as we actually completely tank our savings completely tank, we now go straight into credit cards. So what's going to happen? This is going to get worse. If you check this article out, it says Americans will likely run out of excess pandemic savings this quarter, 2023, this quarter. This means this chart is trending to nothing this year. All right, this quarter. With that being said, this chart, the credit is going to go through the roof. Now, why is this important? People are switching out of savings and they're going into credit. And they're going into credit with high interest rates. And they're going to actually be stuck. They're not going to be able to take advantage of the actual opportunity life-changing opportunity that is simultaneously in our face, in our hands, more clear than the dot-com boom was, more clear than the housing market bubble, more clear than every investment opportunity I've ever studied and ever prayed for. We've got the opportunity sitting right here in our hands, and we won't be able to take advantage of it. We're literally not. As a group, we just can't take advantage of it. It's just gonna go and it's gonna come, and people's lives are gonna change, and we won't even take advantage. We won't even be able to participate, right? So if you check it out, all of our money will be going this quarter. It's trending towards being going this quarter, right? Our credit is going to be insane. We're talking 20-25% credit card interest. Okay, and I'm gonna give you a game plan on what I think what we should do. Well, what I should do. I'm going to tell you what I'm going to do, and you can use that as a perspective, right? And you can generate your own opinion. But this is my opinion based upon the data. So now we've got this thing brewing up. Everyone's run out of money. It's getting insane. Now what's happening? You've got the ETFs, Bitcoin. This is all interesting, right? Bitcoin ETFs. You got Bitcoin ETF approvals everywhere. Everything's talking about Bitcoin ETF, Bitcoin ETF, Bitcoin ETF, Bitcoin. BlackRock is getting a Bitcoin ETF. Everyone's applying for it, right? All of this stuff is happening. Now look at the price of Bitcoin. I think the price of Bitcoin, when I look at Bitcoin, I'm just going to be completely transparent. With the ETFs coming, and you know how spot ETF works. There are a lot of people talking about it, right? If you're watching this video, you probably understand a spot ETF. These investors, these big organizations are going to have to buy actual spot. They're going to actually have to buy Bitcoin in order to have these ETFs, which means they're going to need a good price. Companies like BlackRock aren't buying a $27,000. They're not buying they're not buying at $27,000. I truly don't believe it. I don't believe that BlackRock is buying $27,000 Bitcoin. I think they're going to buy a much cheaper Bitcoin. They're going to buy way cheaper. They're going to do whatever it takes, whatever power it be, to make sure that they don't pay $27,000. And they need to make sure that you can't buy when they're buying. When they buy, which won't be $27,000, I'm certain. There's no way, because it just doesn't make sense, right? They're going to control the media. They're going to control whatever numbers they need to control to make sure that exactly what we're seeing happens. We have no money to invest. We're in credit, right? Check this out. This is I cannot make this up, guys. This is very important. I'm going to give you a solution, my solution, but at the same time, you have to understand the problem. The ETFs are being the ETFs are being fought. The fight for the ETFs is in play. Okay, this is in play. Some thinking that we can have an ETF as early as this year, early next year. Okay. With that being said, we know what that does to the price of Bitcoin. We know what that does to the demand of Bitcoin. Let's not even talk price. From a demand perspective, we know the laws of supply and demand. The demand will go through the roof for Bitcoin. The supply will go tank completely. So we know what that does to price. You can just talk fundamentals, right? So you've got us running out of money, our credit going higher, which means we'll definitely not be able to invest, lining up perfectly with the ETFs. So the ETFs are going to be coming, okay? By the time we're totally knocked out the game, we're not willing to invest even in the guaranteed markets, right? So there are markets, you have to check this out, right? If you look at the housing market, United States housing market, this line goes straight up. Why does the line go straight up on the housing market, right? If you look at the S&P 500, you look over long periods of time, you look at Max, line goes straight up. Why? This is because, this will be for another video, everyone, but our line goes straight up in every asset because the United States only uses debt. The United States solves its problems with debt, and it actually prints money. Our country prints money, the Fed, in order to actually pay their own debt. The debt remains isolated, right? These might be, I don't want to make these complex concepts. I don't want to make this too complex, but long story short, the United States takes $10 of debt. Let's take $10, right? To solve its problems, right? And then to pay the debt back, it prints $20. What does that do to your money? Your money goes down because they printed more money, And everyone who owns assets, the money goes up. The United States doesn't care how much debt they accumulate because they can print more money. And they own debt. So what happens to their debt? If they owe $10 and they print $20, their debt is still $10 worth of debt. They printed $20. It only made your money go down. So only your money went down. Only my money went down. Everyone with assets, their money value went up. The United States debt got small. When they print money, the debt got smaller. They're actually getting less debt because they're causing more inflation. So this is why all these charts go straight up. I've studied this for so long, it's so obvious. This chart goes straight up. It always will. And if it ever stops, our total economy collapse. We have to come up with a new system. This is the way it is here. It is that simple. This chart will always go up. Right? Anything that we can deem a true asset will always go up. And that's because its supply will be limited relative to the amount of money they will print to pay off their own debt. Right? And that's just as simple as that. So if you look at Bitcoin, check it out. Bitcoin. This is the .com boom of our generation. This is it. This is it. All right. This is the best investment opportunity of our generation. Crypto. I truly, truly believe it. And look at the timing. The ETFs are coming oddly around the time where there won't be any savings. Coincidentally, that's probably just a coincidence. Our credit is going to be through the roof, and our credit payments through the roof coincidentally. Check this out. I'm curious, when do student loan payments start back? When student loan repayment start date. Okay, let's see when student loans start back. Student loans, federal student loans will start on September 1st. So they started this month. Wow. So let's check this out, guys. This is not a joke. This is not a drill. This is important. All right. Our savings are going to be going this quarter. Our credit cards are going to go through the roof. Our debt this quarter. The ETFs are planned to be approved this quarter or early next year, right? Even if it's next year in general, it's all at the same time, right? Bitcoin, I believe, is going to be the best price we've ever seen in a while. During the time that we have no money, this chart is totally ruined. This chart looks insane. It's through the roof. We're totally in debt. And we're paying our student loans back. We have even less money. And this buy opportunity, I'm going to ask myself, history is going to repeat. Why did no one buy Bitcoin? I'm just going to be asking myself, why didn't no one put everything they had in Bitcoin? That's going to be the question. That's what I ask people. I ask people this with the .com bubble today. Why didn't you take everything you had and put it in invest it? Why? And this is why. Our country, I don't know about other countries, but our country has no incentive on making the common man very wealthy. The good thing is they don't stop you either. They just don't help you. They don't help you get rich, but they don't stop you from getting rich either. That's why I've been able to make a lot of money, is because they don't stop you. They just don't give you the tools to help you either. They just kind of manipulate you. And if you figure out the game, you're good to go. But they don't stop you. And that's what I like. Right? So what do? Savings savings tanked. Credit through the roof. Interest through the roof. Right? Bitcoin ETF is going to come when we have no money. We're done. Oh, let's make sure you're really done. They weren't paying any student loans. Back. All that's back. Student loans are back. Student loans are back, right? Credit maxed. Savings gone. Bitcoin, we can take the price as low as we want now, guys. We can take this price as low as we want. No one's going to invest. No one has the money to invest to pay for the things they need. They're not investing in crypto. They're not investing in cryptocurrency. I mean, at the very best, they'll invest in things that are at least more proven, right? Like the S&P 500, some index fund, maybe the housing market. That makes more sense. But crypto, the best opportunity I think that exists, Come on, man, that's gone. That's not gonna happen. No one's gonna invest. And I believe I'm definitely taking advantage, man. I'm going to be on the right side of this narrative. I'm going to go double down and be extremely aggressive. I'm looking forward to this price of Bitcoin dropping because I know that BlackRock has no reason to pay $27,000 for it because they can pay way less, right? By controlling all of the things I've just showed you. All right. Now, with that being said, what do you do? What you have to do is you have to become a madman. You have to become a mad person. And the reason why, and what I mean by that is there are only two people that are going to benefit from this. There are only two types of people, I think. There's the wealthy, which is a rich get rich scenario where they're going to invest in this stuff because they have access to do it. And then there's the madman, the mad person, the mad people. Those people are the people that don't necessarily have what it takes to invest. It's not easy. It's going to be very difficult. And they go do whatever it takes to create room to invest, to make the opportunity for the next generation. They do whatever it takes. A second job, not living in a smaller apartment, living in a small apartment, sleeping in your car, whatever. They do whatever it takes to take advantage of this opportunity. That's because this is insane. I need you to understand, if you had a job at McDonald's, right, and you had a job at Burger King Ignite, and you actually invested half of that money and made 20% return on investment over the course of 10 years, you would be a top 1%, you'll be filthy rich. You'll be filthy rich, and that's with that plan. So I need you to understand, and that's putting it in these markets. That's not doing, if you can manage to get 20%, you would be an absolutely insane investor and you'll be super successful. We're seeing opportunities where we're laughing at 100% gains in crypto. We're laughing at the fact that we can make 100x, and we think 2x, 300%, 400% is nothing in crypto, right? This is how big this opportunity is, right? So what do we need to do? What do we need to do? I wouldn't really plan on making 100x in crypto. I don't think that's the idea. I think the idea is to put your money somewhere where it's going to actually fight against inflation. As we print money, which we always will, your money goes straight up with these charts like the housing market, with these charts like the S&P 500. You put a mass amount of your money there and you actually take some of this risk. That's what I'm going to do. I'm going to actually take some of this risk. Okay. The actual opportunity in Bitcoin is insane. The actual opportunity in cryptocurrency is insane. All right. So I think that's the plan, man. I think the plan is to actually be a mad person. If you're not already wealthy, you have to be a mad person. You have to actually step out and actually feel that fear. You have to bite. You have to have some skin in the game. It's no other way. There's no other way. I guarantee you, in retrospect, it's going to look so obvious. Oh, it's gonna be obvious, guys. It's gonna be so obvious. It's gonna be like, man, I wish I invested. Younger kids are going to be like, why didn't you invest? And the whole cycle is going to continue, and a new thing is going to happen, and it repeats. And this is so fascinating. I'm so glad that I get to live through this because I'm going to take advantage of it. I always told myself, if I had this opportunity, I'm taking it. The data's looking perfect. The setup's looking perfect. They're draining us just like we expect, man. Just like I expected, they're draining us dry. And a lot of it is our fault. Some of consumer spending is also through the roof, but some of it is not our fault, right? Like some of it you just can't control because they're printing more money. They're making your money deplete. And if you don't have assets, rich get richer, right? So with that being said, let me know your opinion. I really wanted to make this video. I know it's a bit long, but I've managed to do really well and become a multimillionaire using these strategies. And I plan to actually generate a extremely large amount of wealth. I plan to share those processes with you all. And I'll just keep you all engaged as we move forward. With that being said, I'm out, guys. Peace.